According to the bears, that is the area with the weakest foundation, that is, the least sustainable. However, you disagree with that. Make us more comfortable with that degree of focus. Perhaps the hyperscalers are only in the middle of an end-user story. Stated differently, the hyperscalers, which include Microsoft, are 95% enterprise. To put it another way, if you're a Microsoft shop and you're following this route, it's via Microsoft. No one else will experience what you will. Whether it's Google or Amazon, you will encounter other hyperscalers. Because it's not like Microsoft is a customer. I believe that when you talk about concentration today, it's more about perception. After that, you must ascend to the thousands of businesses. I don't think that properly tells the narrative. As all of this unfolds, hyperscalers are essentially acting as a middleman, and it's all about the end user. The computer that they are buying from Nvidia is being passed through. And it's okay if Dan or Josh Brown place a purchase via Microsoft. It is put through Nvidia by Microsoft. Although the order was placed through Microsoft, it was actually placed by you and me, and Josh. One of the things we'll observe in age over the course of the next few weeks, everything we observe from the standpoint of components is growing. The bears can find the AI revolution 10 floors up in their New York City office building or Metro North Jersey Transit or their spreadsheets. I usually remark when I discuss bears. That, in my opinion, is where a lot of people have missed it, particularly since Apple, the consumer piece, has been absent. You currently own an iPhone 16. The consumer revolution is yours. It's been 4 years since you last updated 300 million iPhones. Nvidia will undoubtedly gain a great deal from all of that, which currently comes through Apple and will eventually come through OpenAI. Therefore, we will return to Apple shortly. I have a question for you regarding Blackwell. At the beginning of the presentation, you made reference to it. For those who don't know Blackwell, please correct me if I'm mistaken. Hopper is the state-of-the-art standard system that Nvidia is now offering. Blackwell is the next version, which Jensen Huang described as a step function change above. The fact that Blackwell will not be released during the quarter that folks had first expected it to be one of the worries heading into the call. Additionally, he made a special effort to clarify to the sell side on the call that Blackwell's delay is due to a new mask rather than changes to its functionality. For the investor who isn't an engineer, what does that mean? In other words, they have essentially raised yield and, from a technological standpoint, have become even more efficient in their production methods. All right, so the worry was that this delay may ruin the celebration. In actuality, though, you're only discussing a few months, and they have improved it during this process. It is now more effective. From a margin standpoint, it is more profitable because they manufacture it. They now discuss the MI chain's billions. We believe that this amounts to tens of billions, and this is only the beginning of the next chapter in that story. Therefore, moving Blackwell's shipments into Q4 has no effect on the demand side. It doesn't significantly change the earnings projections. It's merely a natural occurrence when introducing a new technology. It doesn't always fall on a specific date on the calendar. Additionally, releasing something too soon, whether it be with problems or something else entirely, is the last thing they should ever do. They must ensure that this is a golden item. That puts an end to that because of all the infrastructure that has been built upon it and the fact that some will be seen in the October quarter. Yes, and look, I just think that we sig here over the next few weeks, over the next few months, and the stock reaches its highest points ever because it's like, I think that as more people begin to check, they realize that the demand isn't just for Mag 7, it's also for other businesses and sovereign. Additionally, keep in mind that you haven't even reached Europe worldwide. Right now, the narrative is primarily about the United States, with some parts of China exempt from the sanctions. I have a question regarding the finances. In addition to the already approved $7.5 billion purchase, they announced a new $50 billion buyback. In the event of a market-wide sell-off or whatever, would it make more sense for them to really carry out this authorization or just store it in their back pocket? The second half of that debate is whether these are really buybacks, such as shrinking the float, or if they are merely being used to sterilize new share issuance and stock-based remuneration. You see, I don't believe that press release buybacks are done merely to convey a signal. I do believe that they have identified some of the volatility that may observe. The Black Monday Tokyo panic, in my opinion, obviously caught their attention. It's a real buyback, but the truth is that Nvidia, OpenAI, and Microsoft are the top AI engineers in the world at the moment. Therefore, they must retain the AI engineers because it is ultimately crucial to their business, regardless of how much people may worry about options or anything else, such as issuing new stock as compensation. In reality, though, it's an incremental buyback. They will, in my opinion, immediately follow Cook and Apple's lead. They will actually put it into practice. Then one or two. We're not talking about $50 billion at some point. We'll be discussing big buybacks of $75 or $100 billion. The cash flow is simply excessive. They must use it in some way. Simply plugging everything back into CAPEX is not an option. All right, let's display this earnings chart. The earnings for the second quarter of 2025 were 68 cents. Dan, these are consensus estimations, not yours. However, we're at 74 cents for the upcoming quarter and 80 cents for the one after that. Are you above this? Are you beneath this? In contrast to the consensus, where are you? After all, we do believe in a higher power, where the actual run rate every quarter will be $1.25. In other words, you will now begin to consider our year. $5 to $5.50 per share with 2025 and 2026 are considered. That is to say, if you are purchasing this stock, your primary attention should be on the $5 earnings power figure. That's my perspective on the annual run rate. Additionally, the majority of investors in this name and others are wondering, well, when does Blackwell ramp? When this is truly at scale, how do true numbers appear? And from a buy-side or whisper standpoint, I believe that $5 is the out-year number. Because of this, some of these are quite focused on where this is going to go in the next 12 to 18 months. For this reason, we discussed Apple WWDC. Haters emerge. The stock is $190. This place is empty, and now, 2.5 months later, it's $230. Therefore, my entire point is that sometimes the story is lost in the initial knee-jerk on some of these things. Not just for Nvidia, but for broader tech in terms of that multiplier, the $1 to the $8, $10 multiplier, which is, in my opinion, the most significant thing to the broader ATT. Thus, you obtain 25 times profits power at a $5 yearly run rate. Yes, 25 times. In what way does that affect the stock? Math was not my major. After a while, you start to see $125, and at last, you realize that your earnings are actually $5.25. Are you able to reach $150, $175? Additionally, I believe that the bull case of reaching $150, $175 is really like, okay, I'm looking at this over the next 2 to 3 years. As all of this unfolds, this firm may have $5, $6 in earnings power. That's the bull case when this all begins to unfold, if you're looking at it in the long run.